Hey everyone, my name is Aman. I'm 21 and I'm a student of finance. And in this video, we will talk about the history of money, why cryptocurrencies were created, and should you even buy crypto. Now, I'm not a crypto expert, but most people are not, as this is too vast and too recent to understand completely. Now, a lot of people still think of Bitcoin as a fad, even though it has passed the test of time and has outperformed every single asset class since it was created. BlackRock CEO Larry Fink declares Bitcoin as an asset class, rivaling gold in investment potential. BlackRock is the biggest wealth management company on this planet. Trump has pledged to make US crypto capital of the planet. So this tells you about the sentiment of Bitcoin in the market. For those who still don't consider Bitcoin as a real investment, governments across the world have started experimenting with crypto and blockchain technologies, and some governments have even adopted Bitcoin completely. But what is crypto? To understand this, we'll have to talk about money. So, what is money? Money is a medium of exchange and a store of value. A medium of exchange is something that can be given to buy things, and a store of value is a vehicle to store the buying power between acquiring it and spending it. And there are 5 characteristics that make a currency a good form of money. These are scarcity, durability, portability, divisibility, and verifiability. Let's talk about the history of money. In the early days, people used to trade goods for goods. This was called the barter system. So if I have a cow, I can trade it for something that I need, maybe like a house. But the problem with this form of transacting is if I was a fruit farmer, there were only a couple of days till the fruit was rotten. And it was difficult to move places. For example, if I wanted to move to another country, then I would have to find ways to carry my produce with me. And if you were a cattle farmer and you wanted just half a dozen of fruits, you couldn't pay with just half a cow. All the trades were subjective. A cow for wheat or a haircut for apples. There wasn't a way to know if the trades were fair. So we moved on to gold coins. A lot of problems got solved here. It was more scarce, more durable, more portable, more divisible, and also verifiable, as it was accepted pretty much globally. But it wasn't the most efficient. Now, international trades required ships of gold going from one nation to the other, and this had a lot of threat of getting robbed by pirates. Also, people got greedy, they started chipping down the coin, so it would appear to be of certain value but be much lesser. Also, people could create fake coins by mixing gold with other metals, and this was a problem in the gold's verification as a form of currency. So then governments shifted to paper money, which was essentially just a promissory note that I owe you this much gold. So you give the government gold and in return they give you a certificate saying how much gold they owe you. This seemed like the perfect solution. Now money had checked all 5 characteristics. It was a medium of exchange, and because gold is rare and notes are backed by gold, it is also a store of value. But now again the governments manipulated money. During World Wars, when people were scared about the relevance of their paper money, they would flock to the government and ask them to pay the worth back in gold. And governments misused this power. They banned the convertibility of gold and they would spend it on wars and other things as they please. This is where people started losing trust in paper money. And this anger and disbelief fueled further after the 2008 crisis, when governments across the world started printing more and more currency to get out of crisis and debt, and this led to inflation. Now there was more money in circulation than its worth in gold. This used to be a gold-backed currency, and now it is a fiat currency. And this is the world of fiat currency, where governments across the world, to get out of any minor inconvenience, print like there is no tomorrow. To explain to you why more money in circulation does not mean more wealth, let's think of a hypothetical economy where there are 10 people and each of them have 10 rupees. The country produces 10 apples. So the total money supply in the economy would be 100 rupees and the total output of the country would be 10 apples. So what would be the price per apple? So to do this, we will divide the total money supply, which is 100 rupees, upon the total number of apples, 10. So it would be 10 rupees per apple. Now let's print more money and see what happens. So now there are 200 rupees in the economy instead of 100. But the key thing here is that the number of apples haven't changed. the economy still only produces 10 apples. Since the total number of apples hasn't changed, but now there are twice as many rupees chasing the same number of apples. So the price of apples will go up due to inflation. The new price of each apple would be 20 rupees per apple. Each person now has more money but can still afford to buy the same one apple. So there hasn't been an increase in the purchasing power. Real wealth is only created when you can produce more, if you could produce more apples, not when you can print more. So if you could buy 2 apples from the same 10 rupee note, that would be increase in real wealth. So when governments, they print more money, the prices of real estate, gold, businesses, products, they tend to rise up, and these are owned in majority by the already wealthy, and the price of inflation is paid by the poor and the working class. Let's come to the creation of Bitcoin. To stop the manipulation of money, it had to evolve further, and this is where Bitcoin came into existence. Bitcoin is a democratic digital form of currency that is not controlled by any one authority, but by each and everyone that holds it. But does Bitcoin have all the characteristics? Let's see. Bitcoin has a limited supply of 21 million, making it scarce and a store of value. It has been more and more accepted as a medium of exchange, and once a transaction is recorded, it stays in the system for eternity, making it durable. Also, every transaction is verified by millions of users everywhere, and it can be sent from one person to the other pretty much anywhere on the planet where there is internet. Also, you can divide a Bitcoin into how many ever decimals, making it divisible. Let's compare Bitcoin with other real assets. Let's assume your country falls into an economic crisis like Venezuela or war like Syria. The currency would devalue and the stocks would plummet. And if all your wealth is in real estate, the price of real estate will nosedive into nothing. And if you wanted to flee the country, you wouldn't be able to carry your wealth in real estate to another country. Now let's assume that all your wealth is in gold. So first of all, there is a cap on how much gold you can own personally, and gold will not lose its value. It might even appreciate in a crisis-like situation. But when you want to flee the country, the government won't let you go with all your wealth in gold. Whereas Bitcoin might appreciate in a crisis-like situation, and you can easily take it with you wherever you want to go. So should you own Bitcoin? Now, one of the biggest concerns of Bitcoin is that governments hate it. It takes away the power from the governments. And one of the biggest threats is that governments coming up with a regulation that is against the use of Bitcoin. Also, just as Bitcoin is advantageous, it is also disadvantageous in a fraud or a scam where the criminal is paid in Bitcoin. In that case, tracking the transaction is practically impossible because no government has a jurisdiction or the legal cover on cryptos. Also, Bitcoin is extremely volatile. Although I feel that this volatility will go down with wider acceptance of Bitcoin as a currency. And do I own Bitcoin? So not just Bitcoin, crypto in general. I have around 5% of my portfolio in crypto. That brings us to the end of the video. Please press the like button if you learned something new. Thank you.